I welcome you all today to this session on special session on TDS. So we have with us a very senior and prolific speaker, say Avinesh Rawani ji with us. And post the break, we'll be having the department officials from the TDS department. They will be coming here and addressing our queries on TDS and also explain some new things on the new traces website which is coming. And to give a formal introduction, I would like to invite CA Nidhi Lalpuria. Before that, the one thing has come to my mind, since it's a TDS. TDS is certainly important, but another type of TDS is there which we should avoid: tobacco, drinking, and smoking. So if we avoid that, we'll be having a very healthy life. And I request Nidhi to come and introduce the team speaker.
Thank you, convener. It's my pleasure to introduce Avinesh sir. He's been with us for so many years. He's been the speaker on TDS, but yet C. Avinesh Rawani ji, he's been part of the core committee of ICAI in handling e-filing helpdesk of Income Tax Portal and MCA, and was also the member of study group of Corporate Law and Governance Committee of ICAI. He's contributed to various study groups, articles, and websites, including ICAI journals. He's been a special invitee member of the Direct Tax Committee of ICAI for the year 2018-19 and member of Corporate Law and Governance Committee in 22-23. Presently, he is a study group member of Direct Tax Committee of ICAI. He is also a member of Law and Representation Committee of CTC. I am and also on Commercial Laws, Economic Advisory and NPO Cooperative of ICAI for the year 24. He's contributed to many publications for Malad Chamber of Tax Consultants, where he has co-authored the Book of Fringe Benefit Tax, Direct Tax Committee of ICAI, where he's contributed for the Technical Guide on ITR published, Company Law and Governance Committee of ICAI. He's written many publications. So welcome you, sir. Floor is yours.
Request Mahesh to join us for the meeting.
Good morning, everybody. First of all, I am thankful to Study Circle once again after a long time and I'm again also sorry for last two invitations which was given to me because of other invitations I could not accept it. And this time, since I was free, I told that this topic basically it is related to TDS. And now the new website, we have government also this 3.0 and new TDS CPC 3.0, all CPC 3.0 TDS 3.0 is also coming. So let us discuss on this topic. But today's topic, which I am going to discuss, is about critical issues on some sections, which is related to documentations and which is required to be maintained. I'm audible? And which is required during the course of assessment. TDS being a long section is very tedious, which everybody knows. Some 4 or 5 sections which are going to discuss, not more than that, because this topic being very large requires years and years to discuss. Was chapter 12b. Now I think section 192 to 194, 195 covers everything. We have reached last 194T. Now only some is remaining. Double will not come. Only what is remaining to be taxed for deduction. That you have to tell now when the officials come that this is remaining. Only the money which is removed from the pocket in the morning, that does not come out of the tax, that has to be seen for deductions. Is on the lighter side. But for today's discussion, just this is for the purpose, the material which is circulated is only for the purpose of discussion, should not be taken as a legal advice. What is applicable for your clients, you just please study the provisions. This is only what is prepared for the discussion. Neither the study circle nor the speaker is liable for this. Please take a note for this. And if you find anything which is printed by mistakes, please bring to the notice so that can be rectified. Topic for today's discussion. Basically, these are the sections, that is section 192, where we will be discussing about the employer's compliances, what documentations you have to preserve, what is the verification and the responsibilities of the deductor. Because generally 192 provisions which deals with the salaried employees and people, the genuine taxpayers of the countries, the more and more people tax is been deducted at the time of payment. When the salaries, TDS is deducted from the salary, this is the provision where more and more fighting is there with the employees that you don't deduct my salary, don't deduct my TDS. Second provision is about 194 IC, where deductees and deductors' responsibilities is there. Basically, this was introduced when joint development agreements. This is because now redevelopments are being happening. Second, about 194R, the provision was introduced where the benefits are being given, what precaution has to be taken. Then new provisions introduced, that is 194T section about remunerations or any payments which has been made to the partners. And lastly, about 206C, some provisions with examples, some of the examples. We are not going to deal much in details because we have department people also, where we have so many issues to discuss with them. So these are the topics which we are going to discuss today. Coming to the first topic, that is section 192, without discussing the provisions of the act, we cannot go much in detail. So what this provision says, that every person responsible. This is the definition which starts with every person responsible. Now, what is the definition of the person? Who is the person in the definition that we need to analyze? That we come into the other slide. Then second, it says the second part says paying any income which is chargeable under the head salary. That is a person who pays the salary. See the definition, the words which says shall deduct the income tax on the estimated income of the assessee under the head salary. The tax is required to be calculated on the basis of the slab applicable. See, if you see these provisions, the material is going to be circulated. Please don't take the photographs of it. It will be placed on the website also. So the provision, it says the person responsible require paying the income which is chargeable under the head salary shall deduct the tax on the estimated income of the assessee under the head salaries. Tax is required to be calculated on the basis of the tax applicable. Now, if you see in all other provisions of the Income Tax Act, you have the basis, the minimum limit which is required to is that in section 194C that you have, if the income exceeds 30, your payment exceeds 30,000 or 1 lakh or whatever may be there in 194J, 30,000, etc., then you have to deduct the TDS. But it says you have to estimate it, the salary which is there. The provision that your tax applicability is there. So if that estimate is income, if it exceeds, so you have to just see that you have to prepare the computation of income of that person or that employee. And if based on that computation of income, if it exceeds, then you have to deduct the tax. The deduction is required to be made at the time of actual payment. So when the actual payment is made, at the time of that, TDS is required to be deducted. The TDS is required to be deducted. And TDS on salary is required to be deposited in the government account. That is normal procedure is there. That is you deduct the TDS and deposit. There's a challenge number, this everybody is aware about it. Employer or deductor is required to prepare and file the quarterly statements in the form number 24Q. That is, we have a separate form number 24Q. That is, it is for salary, we have a 24Q. For others, we have 26Q. Other forms are there. With the income tax department, there is quarterly returns and certificate of deduction of taxes to be given. That is form number 16. This is a general procedure of section 192 is there. So this is the general provisions of section 192. Then 192 section notice is required to be deducted by any person. Now here is a debit. Yeah. Any question is there? So if you have any question in between, please intervene in between. No problem. We can take it in between. So TDS under section 192 is required to be deducted by any person responsible for making salary at the prescribed average rate of the tax on the estimated total income. Now, what is the biggest thing over there? You have to deduct this tax every month. Now, if a person is there, his salary is there, his annual income is estimated. Now, suppose a person is there, he is going to get the salary because you know this average income is there. Basically, he will be earning the income for the full year. So you compute his salary, what is the liability will be there. Based on this, you work out his tax. And based on this, average tax will be worked out, average rate of tax will be worked out. So whatever his salary will be there, you discuss, you work out the tax, and every month you have to deduct that much tax and you have to deposit to the government. Now, what will happen if you don't deduct the tax at that rate? See, generally what happens, the employee will come to you, that is to that, you don't deduct my tax. This is the practical problem everyone will be facing, that don't deduct my tax this month, you don't deduct the tax, you deduct in the next month, you deduct in the, this is all, everybody is facing this problem. All company, all employees are facing it. But the law says that you have to do it, you have to follow this procedure, right? Then if you don't deduct this tax, this one, then what will happen? You will have to pay the interest in the subsequent month. Who has to pay it? The person who is responsible to pay the tax. Definition says the person who is responsible to pay the tax. So this is the person. Now, who is the person? Definition says the person responsible for making the payment. And for various categories of employees, the person responsible for making the payments under the head of salaries are discussed above. Now, the person, the definition says these are the persons who are responsible for making the payments. For central government, the designated drawing and dispersing officers. The person who is dispersing the salary, he is the person responsible for making the payment. Private and the public limited companies, the company itself as also the principal officer thereof. So he will be the person who is appointed to disburse the salary. This is what the definition says. Firm, the managing partners or the partner of the firm. HUF, the Karta of the HUF. Proprietorship firm, proprietor of the concern, and trust, the managing trustees of the trust. So section 192 for the TDS says that the tax will be deducted at the time of actual payment of the salary. So if the provision is made, at the time of making the provision, tax is not required to be deducted. But if you, at the time of actual payment, you have to deduct the TDS. Suppose in case advance salary is paid. A person will say that, yo, I want an advance salary. You pay me the salary in advance. So what you will have to do? You have to deduct the salary because salary is provision says that you have to deduct the actual TDS at the time of actual payment. So salary is paid in advance. So you have to deduct the TDS at the time of making the advance salary also is required to be. Yes, you had some question. Tell me.
Person usually pays some salary to a servant, home servants. Then also the TDS is required to be there.
But that it is on a personal, if it is a personal expenses, then not required. If you are going to claim it as an expenses in your business, then it is required. Yes. So thus when the advance salary and arrears of salary has been given, the same is also to be taken into the account. Suppose now previous year's salary is paid. A person who says now the company pays as a salary which is arrears salary. They work out as an arrears salary. Now previous year's salary is being paid in the subsequent year. So if that is also paid, then also you are required to deduct the TDS. Because that is the arrears salary which is paid in the subsequent year. So that time of the time of making the payment, you have to deduct the salary TDS. Now then again, there are certain provisions that you have to give the tax reliefs. You have to work out the tax reliefs. That also has to be done. And there is a formula for that. What tax reliefs you have to do it. Tax relief has to be given. I think tax reliefs you have to give. You have to work out the tax relief because section 89 reliefs are also there. That all formulas are there. You have to work out that and you have to give the reliefs. But there is one circular which is there. We'll come to the circular because circular for on 15th October, so circular has come. Some changes have been made in that. So that is the second thing. Now, what the compliance the employer has to give. Now, once this is what the provision says. Now, employer has to do certain compliances while making the payments, such payments. First of all, it says that while making the payment, employer has to see that the person has a PAN number. Now, if the PAN number is not there, what will happen? Higher rate of salary, TDS has to be deducted. So first, while making the payment, when you do, the employer has to see that the person to whom the salary is made, payment is made, TDS is deducted. He has PAN number, he has to have the PAN number. Second requirement is that computation of the salary has to be done as per the amended provisions. So to see that what is the provision for that particular assessment year. So what is the computation of income has to be prepared as per the financial year or the assessment year for that particular year. Then deduct the tax on the employer's taxable salary. You have to work out the taxable salary. Pay the TDS to the government, file the returns and provide the certificate. This is the requirement of the compliance is to be done. Then responsibilities, that is deduction. For computing the deductions, you have to see that you have to consider all the income of the employer and the employee, not just the salary income. You have to see that he has reported to you all the income which he has earned. That is what it says, that you have to compute, take the declaration from them, what other income other than the salary he has. That also has to be considered while deducting the TDS, not only the salary income. If he has worked somewhere in other company also, then you have to take the into consideration the income of the previous employer and any TDS is deducted by the previous employer. For that, you have to work out the full salary, compute the tax, whatever TDS has been deducted by the previous employer, that has to be deduction for that TDS has to be allowed, and whatever balance is remaining, divide by number of months which is there, and that much tax has to be deducted and that has to be paid. Loss from house property has to be allowed. That has to be allowed. No other loss has to be considered other than the house property loss. But for this, a declaration has to be obtained from the employees in the prescribed form and the manner. There is a form which has been prescribed. In that specified form, only you have to obtain the declaration, not on a piece of paper. There is write on a piece of paper, this is my declaration, that is not valid. Yeah.
Yeah, there's not some other income which they just used to declare. Increasing is good, every declare, everything is to declare.
Yes.
And then what about the TDS fund?
Yes, I'm coming to that. Then provision to section 192 2B has been introduced. It says that there are two options. It says that tax on salary minus house property loss, work out in that way. From that, whatever TDS has come, from that TDS and TCS what is reported. See, first what has to be done, that you work out your tax on salary less house property loss, that TDS what it has come, and what TDS and TCS what has been reported, you give a credit for that, and whatever the amount has come, that will be your TDS deductible under section 192, right? Second option is that tax on salary minus house property loss plus any other income which is reported by the SSA. From that, you have to work out your TDS less TCS reported by the SSC. That will be your TDS under 192. So you both this, whichever is higher, that will be your TDS deductible. Higher of this will be your TDS deductible. This is what the section 192 2B says. So this is what section 192 says, that you have to deduct this much TDS. So this is the formula which is given under the section. You have to work out this, and for that the declaration formula has been given. The amendments under Finance Act 2024. Generally, what is the biggest problem is that the circular always comes in the month of October or November. Actually, the circular should have come in the month of April or May. So this will be the right way to work it out. When it comes in the month of September, October, when the half year is always over and the burden on the employee comes in the month of, starts from the month of October or November, when almost all part of the salary has gone.
If the employee have capital gain,
All employees says that they have all income, no?
but
How you report capital gain, what would you do January year capital gain of 2025 or in February you will lost 30.
So that's see when he has given the declaration. So in the month of February, January or February, suppose he gives a declaration again. So balance whatever the tax in the month of January or February, you have to again rework out that. So if there is any shortfall is there, then you don't deduct any taxes in the next months. So you again obtain a declaration in the month of January or February. If there is in the subsequent month, if there is no tax payable, whatever is deducted for that, and then subsequently if there is any short excess deduction is there, then you don't deduct any tax for that.
Then we will go for
Refund. He has to go for refund.
we want to give all the income statement to the.
Yes, as per the law, he has to give it.
Yes, okay.
Yes, as per the law, he has to give it.
Including capital gain.
Yes, everything. It says all other income. Then it says the amendment, the Finance Act has been amended from October 1. That is a circular, this CBDT notification number 112 of 2024, dated 15th October. That employees to report to the employer income from other than salary, TDS or TCS, on other incomes via newly inserted form 12 BAA. So this form has to be obtained from the employee. 12 number form number 12 BAA has to be obtained from the employee. This is the form declaration has to be obtained, and details of loss from house property. So only one from the one house property loss can be allowed, not from, suppose he has 4 or 5 loss property, and if he gives the declare that I have so many properties and from this loss is there, you allow me all this loss, that is not allowable. Only from one house property loss can be allowed. That cannot be allowed for more than, because maximum limit is there that 2 lakhs rupees loss can be allowed, that can be allowed for. Then second, other amendment forms, that is form number 10E. Form number 10E is about form number 10E is for this 89 section 89 section 89 this section 89 relief. So section 89 relief which is to be allowed for tax in areas which is credit has to be given, or release for advance salary. So this form has been amended from 1st of October. So this, if relief has to be given, you have to work out, you have to give them 10 number, this declare work out in 10E, the formula has been given, in that you have to fill up, and that has to be given to them. So form number 16, part B, annexure 1, and form number 24Q. These forms are amended from 1st of October. So these are this is proposed in form number, this was proposed in the Finance Bill 2024. So this now what is there? The employees' compliances, it has been given in the glance. That is, first of all, you have to compute the proper salary, and in that you have to compute all the proper perquisites. All perquisites also has to be taken into account. You don't have to, means you have to see that whatever the perquisites, taxable perquisites are there, that also you have to consider it. So suppose if a rent-free accommodation has been given, a car which has been given, etc., whatever this is, as per the section 17, whatever the taxable perquisites are there, that has to be added. And consider salary from the previous employer, other income, consider all the other taxable income, only positive income except house properties, house property for SOP, one loss can be allowed. Tax relief for working of for areas, if any. Reliefs, if it has to be given, then you have to verify all the reliefs, whether the reliefs are correct or not. That is the mandatory requirement. Then coming to the tax regimes, because employee has the option to adopt the new regime or old regime. This is the biggest challenge. Because what will happen? Employer may say, I'm opting for old regime. If he is opting for the old regime, then other deductions may be applicable to him. Some deductions may be applicable, some deductions may not be applicable. So in that case, what will happen? A declaration has to be taken, a form has to be filed. Here in this case, suppose he is having some business income, etc., then he is required to file the form. And in other cases, he is not required to be file the forms. Form number 10 IC or 10 IE, etc. is there. So he is not required to file the form. So in that case, suppose he is opting for the a new scheme or old scheme, the declaration has to be taken from him, because these all declarations will go in. Filing for the scheme will be reported in your TDS returns. Then tax deductions, consider TDS from earlier salary and other income, and statutory compliances. You have to pay, once you have deducted the TDS, you have to pay the TDS in time, file the returns in time, and issue TDS certificate in form number 16 annually. And you have to issue form number 12BA, which is the perquisite form. This is the mandatory form. If you have computed the perquisite in the salary return, you have to issue form number 12BA. That is mandatory. And after filing, there's a filing the returns. 12BA, it is seen that many people are not issuing form number 12BA. But 12BA is also mandatory. It has to be issued, whether it is a requirement of the employer from the part of the employer, that it has to be issued. Estimated working to be prepared in advance and TDS to be deducted each monthly, which is seen that many people are not filing the returns, this estimating the tax. Generally, what happens is the salary figures. The employee, what they do, they give you the figures that we will be investing it this much amount, and subsequently they don't invest the amount. This is the biggest challenge. In many cases, So what you can do in such a case is that you have to estimate what they have done in the previous year. Based on that, you can take the average and you can work it out and you can deduct the tax for the earlier 2, 3 months, 4 months. You can do it and you can work it out. And obtain the certified documents for deductions and claim and verify with the originals, because now we can see that whenever any documents which are given, generally they send you by mail or some Xerox copies or photocopies are seen. Photocopies, you can see that how it can be tampered with or how can documents are come. So when a person who is getting the documents, it has to be verified with the originals. Because when any claims which are allowed, and if it does not match with the originals, then what will happen? The person who has received the documents, if they are found that this type of the documents which has been received, and there are no such claims which are eligible or which are allowable, these claims are actually not allowable, then the company or the person who is responsible for making the payment, the company will have to, or the SSC will have to, the deductive will have to pay for the difference of tax and will be liable for interest and penalty also. Yeah, please.
The introduction of this income tax returns, we know for the fact that in we know for the fact that many of the deductions cannot be taken into account by employer at the time of computing the TDS. So if the employee is always giving a declaration regarding opting for new tax regime and end up while filing the return for going with the old tax regime, and the TDS or the tax comes out higher than the actual deduction by the employer, then who will be the assessing default? Like if the employer has got the declaration that he is opting for new tax regime, but he ends up filing the return in old tax regime.
See, when he has given the declaration that he is opting for the new tax regime to the employer, and at that time it is in the return it is given that new tax regime is opted, then the employer is not at default. But in the return of income he is opting for the new old tax regime, then will be at a default. SSC is at a default, then the employer is not at a default.
What is not really attributed on the part of the SSC, there's an employee.
SSC has to pay the interest and tax. Huh? Definitely, employer is not at a default.
The employees are also doing it very willing, like intentionally, because they know that these deductions will not be taken into account by employer. So they know that right now to get more personality, they are opting for new tax regime.
See, basically, once you have taken the documentary evidence, suppose if any notices comes to the employer, and if they are able to prove that this declaration was given, then they are not at a default. But suppose if they do it intentionally and to the help the people, then definitely they can be cash hold down. So basically, that is the thing that you have to whenever this any claims which have been whenever any false claims are done, then you have to justify it with the documents. If you are able to justify it with the proper documents, then you are not at a fault.
Many times,
Hmm.
employees don't give earlier salary details, previous salary details, previous employer salary details.
See, now in AIS everything is available. You have to when you say AIS statements is a foolproof document, everything is available. So you can ask for the AIS 12BA AA form is there. I'm coming to this form 12BA. See, this is the slide I'm going to discuss. I'm coming to this 12BA forms. Just please complete. Let me complete this slide. Then you can take your question. If it's you don't get the clarification, then you come. So this is introduction of 12BA double form. This is an this initiative to streamline the credit claiming process of TDS and reserve. Till last year, what was there? Any TDS or TCS which was deducted, credit was not given by the employer. You had to go and claim the refund. But now 12B AA has been introduced. It said that whatever TDS has been deducted, TCS has been deducted, we are reporting the income, claim the TDS, TCS, and get the credit for that. additional intimation by the employer to the employee to the employer. So you intimate it. It is the duty of the employee to report to the employer. So that form has to be taken. In that form, so the employee has to report to the employer. So if he doesn't report it, then employee is at the default. Employee is not at the default. Reportage of non-salary income, TDS is on the other income and expenditure and employees. If the employer has taken this declaration, and employer has not reported, then employer is not at the default. Employee is at the default. Then it helps at the reduction of tax in the hand of the employees. Now, suppose if the employee has reported it, then what will happen to him? Is all tax will be computed and a TDS will be deducted properly. He will not be liable to pay any further interest and TDS, shortage of TDS, etc. Suppose if he has not reported, then what will happen? 234B, 234C, etc. Higher tax will be reported, because generally what happens, employees are very sharp enough. They will claim that 2,50,000, 3 lakh, 5 lakh deductions. I have saved the tax, and subsequently when they go for filing the returns, the liability comes huge. But after the introduction of AIS and TIS, everything has been included over there. And when the liability comes used, they have to pay the interest and all. So if they report it, fine. If they don't report it, it is your duty that you take the declaration from them. Once you have taken it, they have not reported, they are at fault. You are not at fault. Fine. So this resulting in easing of the cash flow to the employees, potentially increasing the disposable and income in the hands of the employees. Fine. Your query is solved. Now documents to be written here, please. You can take it as many times you want it. No, twice a year is fine. Documents to be obtained and retained by the employer.
Sir, as an employee, I would not like to disclose my other income to the employer. And in this case, whatever taxes deducted in the other income, I'll be paying my advance tax. So will there be any consequences of what?
No, nothing. Now, what is the documents which are to be obtained and retained by the employer? Now, this is the important thing. All documents documents to be obtained and retained by the employer. This is because declaration from form number 12 BAA statement showing the purposes of section 1. So now 192, whatever the documents which the employee submits it, employer has to. It says that 12 BAA form has this so many details. That is details of the employee's name, address, PAN, and Aadhaar number. Details of the tax deducted at source, that is section, name and address of the amount, this name section. For the TDS which has been deducted, section, name, address, TAN of the deductor, amount and income tax and TDS thereon. Details of the TDS tax collected at source and loss under the head income from house property. This is the that. So any documentary evidence which is there given, it is the duty of the deductor that they have to obtain the documents, they have to verify the original, and they have to preserve this document on record. They have to verify it with the originals and they have to preserve it for the record. And verification of documentary evidence by the employer. Evidence of the claims by the employee. All these documents has to be verified. Rule C26C says that in form number 12 BBB, that is if house rent allowances claim is allowed, then the name, address, and PAN number with the Aadhaar number of the landlords with the aggregating rent paid during their previous exceeding 1 lakh. So if any house rent is allowed, claim is exceeding 1 lakh is given, then you have to see that the PAN number and Aadhaar number, including the agreements which has been given, documentary evidence, foolproof evidence is to be verified. Now, generally what happens? Handwritten house rent receipt is given, allow it claim, allowed it. So that house rent receipts, etc., that is to be foolproof. It has to be documentary evidence with the nature of agreement. Generally, it should be ensured that whenever any agreement, any payment which is exceeding 1 lakh is made during the year, it should be backed up by a registered document, and which should be a PAN registered document. LTA concession or LTA evidence of expenditure. Deduction of interest from the house property, name, address, and PAN number of the lender. Deduction of the chapter 6A, then evidence of investment of expenditure, that is section wise with the proof. Now what will happen? They will give you the LIC receipts where the claim will be there in for all the employees from the family members. So LIC receipts may not be the LIC receipts may be there, etc. etc. All family members would have claimed this. So you have to see that, ensure that they give you the proper receipts, verify it that it is paid original, verified with the originals, and claims are there supported with the proper claims. Generally, what will happen? The receipts which are given, they may be in some other names, they may be with not proper names, proper disclosure may not be there, but the person who gets the receipts should ensure that the original receipts are verified, they certify it and keep it in the record. Generally, what happens in the corporate clients and all, the person who is verifying it may not be there after 2 or 3 years, because when the assessments of the TDS returns comes, the person may not be there on the job. At that time, when that, what will happen? If the documents are proved to be non-genuine, the company may not be liable for such things. Then these are the amendments to the forms that is made. That is form number 10E, substitution of the section 89 against 89(1). Previously only section 89 was there. Now it has been replaced with section 89. Means all these sections are covered in this form. That is, if you see, these are the rows which are reflected. This change in the form. This is just for your reference purpose. Then now suppose the employee says you don't deduct my TDS. This is the common problem everywhere. Employee will always say, don't deduct my TDS. I will pay my TDS on my own. Then what to do? You have to straight away tell him, you can go approach to the jurisdictional officer, obtain the lower rate certificate in form number 13, and so that I will not deduct the TDS. This is the option available to them. TDS is deducted and not deposited by employer, because in many cases what happens? The TDS is deducted and the TDS is deducted by the employer. They don't deposit the TDS. Then many cases it is found that the problem is there. Was Kingfisher Airlines, Jet Airways, such type of employers, many cases it has happened that they have deducted the TDS. Now another new problem which has come in Byju's also it is there. Recently the Byju's case also it has been there because employees TDS was deducted, but TDS, they have not deposited the TDS. So here it is there that TDS, if it has been deducted and it has not been deposited, then you can take the remedies that up to the amount of TDS which has been deducted, it cannot be recovered from the employee. You can fight this case. Is law is available, that Karthik Vijay Singh Sonawane versus Deputy Commissioner of Income Tax, that is civil petition number 613. You can take the help of this. Up to that amount, TDS cannot be recovered. Then deductor,
But it doesn't get the credit.
yes, credit cannot be, to that amount it cannot be recovered.
Cannot take the credit for that.
It is to that extent it will be kept as a pending to that account. So once that solution comes, to that extent it can be kept pending. You can fight it. Yeah, demand will always be there. You can fight us, file a civil petition against them. But to that account it will not be there.
Interest will not be there.
Yes, it is.
209D.
Yes.
That benefit will be available.
Department is adjusting that outstanding earnings in the future.
You can, yeah, but you can, this will be kept and you cannot till that account, department will give you, you can ask the department when they come to protest. The deductor will be required to give full and correct incomplete details for the perquisites of the profits in lieu of the salary in place of the person responsible for paying such income. If deducting responsible for deducting tax, if such payment exceeds rupees 1,50,000 and issued form number 12BA. So this we have already deducted, discussed about it, that 12BA is required to be issued. Then so this is basically related to this.
They are obtaining Microsoft forms so that evidence is good enough for any data.
Basically, see, you have to ensure that there has to be some signed document, signed evidence, whether in the form of a digital signature or tomorrow it should not say that, it should not be that this form was not some form of technology. See, as per the Information Technology Act, it is a valid document, but some sort of signed document has to be there from that. I would always recommend that even if they mail it to you, you have obtained a signed document from them. That is I recommend it in that way. Though it is a mail document, because tomorrow if an employee leaves and goes away, a mail document is the mail document. You can challenge it anyway under the information technology. You can definitely challenge it, but still that also I recommend it that you have a signed document. Though it comes to mail, let it be a scanned copy, signed copy, but it has to come by mail.
And if you want digitalization, but you don't want it.
Fine, it's fine.
Sir.
Yeah, please. You have time till 11:51.
Sir, in case of an employee has specifically said that he's going toward a new regime. So, and the tax is calculated on estimated basis on the new regime only. So, and he says that I am not, it's okay if you don't take my ATC investment proof and everything because he's going for a new regime. It's fine on our part.
Yeah, that's it. Once he has opted for new regime, then there's no requirement of to take the day. Fine, it's perfectly all right. So coming to section 194 IC. Coming to section 194 IC, that is TDS on specified agreements. Now everywhere Bombay is under construction. We have taken birth earlier. I think we will have to have taken birth after 10-15 years. So this is basically related to section 45(5)(a). Now it says that it's a joint development agreement. Those who are basically into construction. Now anybody who is having a property, this deals with that. A registered agreement, a joint development agreement where the owner of the land, a building or both agrees to allow other person to develop a real estate project. Now if I am having a land, I give it to some other person to develop it for this, and against that he gives me a flat or consideration or anything. So this will come into picture. The property should be held as a capital asset in my books of the owner. The owner should be an individual or HUF. So then only this provision will be applicable. Other than this provision will not be applicable. The property should not be transferred by the owner before the receipt of the completion certificate. So this provision will be applicable at that time. Okay. Now it says that what is the responsibilities of the deductor in this case will be that, first of all, the deductor has to see that this agreement has to be verified whether it is a joint development agreement. A specified falls within the category of a specified agreement. So you have to verify that whether it is a specified agreement. The specified agreement we covered into first. Tax has to be deducted at the time of credit of the income or actual payment, whichever is earlier. This is as per the normal provisions. Tax rate is at the rate of 10% if the PAN is operative. Now see here it says that PAN has to be operative. Now everywhere in this TDS provision you have to verify that PAN is operative. PAN is operative has become mandatory now. So 206 AB has to be verified every year. Tax is to be paid via TDS cum chalan in 26C. So this is again PAN to PAN linking. PAN to PAN has come in many sections now. So half we have PAN, half we have TAN. So either better remove TAN only. Now why it is required? Somewhere PAN, somewhere TAN. Make it one PAN only. No? We have requested to the government, make it one only. Why two things are required? No? Make it short. This provision is applicable when person is a resident individual. For non-resident individual, this will not be applied because in that case, 195 will come. There is no threshold limit for deduction. Even if you pay 1 rupee, it will be applicable. Non-monetary consideration is not covered. So property against property given, not coming. But what is happening here? people are considering non-property means non-cash transaction is also covered. TDS, this is the flaw over there because they don't know we are going to deduct it. So here this is wrong. It says that only cash if it is paid, money other than is paid in cash, then only TDS is required to be deducted. And TDS is certificate is required to be paid in form number 16C. So this is only the requirement because all property transactions is PAN to PAN. The person is not required to here to have a TAN number. So when the sale of property is there, you have to file 26 QB. In this case, you have to file 26 QC because in rent also you have to file 26 QC. It is on the line of same lines. So this is basically the requirement. Now in this case, what deductee has to do? Deductee has to see that if his TDS is deducted, he has got the TDS certificate. Deductors and deductee has got the claim properly and check that deduction is in the correct financial year. Because what happens, the income will be taxable in the financial year when the financial year in which the yes, completed. So that has to be checked and claim has to be in that particular year because then it will be transaction will get over. So this is basically related to financial this 194C. Now what will happen? In there some issues are there. So can it be contained that the requirement of section 110, this section is the only situation where the landowner is an individual or HUF under section 5 applies to an individual or HUF? Definitely yes, because this provision is applicable to that only. Then if the TDS is deducted under 194C in different years, money they will pay in part and part. Builder generally what happens, the landowner they may pay in part and part. So then how the claim has to be made? They may not. Suppose a part OC has come. Generally what happens when the building is constructed, builders generally they take part OC. Commercial part they will take part. Residential they will take part. Part OC comes in the building construction agreement. What they happen, they take part OC. Full OC will not come. Then in that case, what has to be done? This is one issue is there. So what has to be done? Part OC has come. So when part OC has come to that extent, suppose of paisa, I am holding a land and I have got a certain shops and for that part OC has come. So that part is completed. So that part is completed. I have got the money for that part. So to that part, to that extent, the OC has come. So that part is completed. So that is completed. That transaction is over. So I have to claim that TDS. So I can claim that TDS, no? Right or no? Do you agree for that? So that is over now because that part OC has come. That transaction is completed. Residential part, subsequently I'll get it. So subsequently I'll get that. So that has to be. Suppose if the money I have received it and the OC has not come for that, building completion has not come, then I have to carry forward and I have to complete it, take it next time when I get the OC. And if I'm an individual or a HUF and that land is not a capital asset in my books of account, that is a stock in trade, then this provision won't apply because this is not a capital asset in my books of account. Fine, this clear? Then TDS on payment under specified agreement. Suppose an alternate accommodation has been given or rent, hardship allowances, whether this can be considered as a consideration under section 194 of IC. So there is one judgment, that is Nathani Parekh Constructions versus Private Limited versus ITO. It says that this will not be treated as a consideration because the part of share in the land or building both in the specified agreement would not fall under the provisions of section 194 IC. You can take the benefit of this because ITO via this ITAT Mumbai judgment will be helpful for this. Fine. Okay, so this completes 194 IC. Yeah, ma'am, please.
It will be indirect to a joint development agreement with the society, the builder. And the question is with regard to the builder only. So when I enter into a joint development agreement, so every tenant is an individual owner for that. And if I am paying rent to them, although there are various IKT benefits for the capital receipt and all, but the new, I mean, with like of 194 IC, it is advisable to deduct 194 IC and
You will not cooperate. Your builder is, your agreement is not with you, no? It is with the society.
society is being formed by them only.
See, agreement is not with you, no? The agreement is with the society. You is not an individual on nature. No? See, this is TDS.
TDS on TDR. TDR, transferable development rights.
I think no. 194R. This is about perquisites and benefits, which was introduced. Now it says that any benefit. Now, do you have these people who had last year tax audit, which has been done? We have verified everything, right? 194R. How many people who have reported in about this section in last section? It was introduced from 1st July 2022. The provision says that this provision is not applicable to an individual or HUF whose sales or turnover or gross receipts is during the previous financial year for the business if it is less than 1 crore, or for the profession whose turnover is less than 50 lakhs. TDS is at the rate of 10% on the aggregate value of benefit of perquisites greater than 20,000 of a financial year arising from a business or profession, whether in cash or partly in cash or kind, to a resident. So any payment which is made, TDS is liable to be deducted. This is applicable from 1st April 2023 as per circular number 12 of 2022 dated 16th June 2022. Now,
In the case of companies, they give discounts, incentive to their.
I'm coming to that. So it says that TDS is required to be deducted by the benefit or the provider. The person who provides the benefit, he is required to deduct the TDS if any benefit is exceeding rupees 20,000 per person per annum. But if that TDS or that tax has been paid by the recipient has discharged his liability, then TDS is not required to be deducted. And to that extent, the declaration has to be submitted by the recipient that I have paid the tax on that benefit I have received, and this declaration, the proof of this has to be submitted to the deductor. But this transaction has to be reported in the 26Q return. This is required to be mandatorily given. So this is the provisions requirement. Now it says that deductor has to check the taxability of the benefit in the hands of under clause this section 228-4. No such requirement in the sections. The reliance has been placed on this section, this clause. Benefit may be perquisite, may be in cash or kind, which may be taxable whether in cash or kind or both. Capital asset is covered, yes. Nature of asset given in perquisite or kind is not relevant. Nature of benefit may be in taxable is clarified by the CBDT. Now it says whether sales discount, cash discount is covered or not. The relaxation has been provided that sales discount, cash discount and rebates which are allowed to the customers is not covered. Incentives which are given other than cash discount, sales discount and rebates are covered. That is, suppose if a car, TV, computers, gold coin, mobile phones, sponsored trips, etc. given, free tickets, medicine samples to these are covered. Then use of benefits or perquisites are not relevant. That is applies to the owner, director, employee. of the recipient entity or relatives who may not be given or carrying on the business. Suppose this type of benefits which are given to any other person, other are not related to the business, then also it is covered.
Sir, that is incentive. Incentive, there is option to be either, so you can take incentive or you can take article incentive.
If it is given as an article incentive, then it will be covered.
If it is taken as a cash incentive,
Cash incentive means basically what is it is there. Suppose if it is given as an article, it will be covered. But if it is given as a cash sales discount or cash discount in the invoice, then it is covered.
no, but it is the incentive which is given at the year end,
Huh.
of seeing a particular amount of turnover. So now my incentive is worked out, it's a 1 lakh.
Yeah.
Right? So they will be credited in my ledger,
No.
either in my ledger or
Yes.
they will use the article.
No.
So
If it is given as an article, it will be covered. If it is given as a this, then it will not be covered.
So what about the withdrawal of community?
Foreign company, please. repeat.
Director, if I give a loss of some 10 lakhs of rupees to a foreign director of a foreign company, then
Means
what if I give a dash of the 10 lakhs to a foreign company, director of a foreign company,
for what purpose?
for business, we are in the business of a foreign company, and I give a gift to the director of that company.
But purpose means
Because it's a director of the foreign company.
it will be taxable. It will be taxable.
But how is it taxable? How do you?
No, but for business purpose, you have given for some, what is the business, what are the it will depend on the transaction. We welcome the departments to. Basically, your transaction nature has to be seen, how, for what purpose it is there. You have to see the nature of the transaction, you have to study the exactly transaction, based on that it has to be seen. Then doctors receiving free medicine samples as in hospital, if it is there, taxable in the hands of the hospital being the recipient entity, and hospital has to deduct the TDS under section 192, considering as a perquisite to the employee under section 17. But if a doctor is working as a consultant in the hospital, then it will be taxable in the hands of the hospital being a recipient entity. The hospital has to again see that whether it will be taxable under section 194R on the working consultant. Then value of the benefit or perquisites has to be seen based on the fair market value, but the exceptions are there. That is whether GST has to be included or not for the purpose of valuation purpose. The provider has to see where providing it. This is purchase price. It is a manufacturer. The price what is charged to the customers will be the value of the perquisites. And if the item has been given to the social media influencer, then if the product has been returned back after using the services, then it will not be a perquisite. But if it has been retained, then 194R will be applicable. Then, if any reimbursement is there, out of pocket expenses, then if the invoice is in the name of the client, and if it is paid by the client directly, or reimbursement to the consultant, then it will be taxable. If the invoice is in the name of the client, payment is made by the consultant and reimbursed to the consultant, not will be considered as a perquisite. If there is a dealer or a business conferences, not taxable in the hand of the deductee. If the dealer is for this not taxable if held to educate the dealers or the customers about any of the following similar aspect. That is, new product is being launched, discussion as to how the product is better than the others, obtaining orders from dealers or customers, teaching sales techniques to dealers and customers, addressing queries to the dealers and customers, reconciliation of accounts. It will be taxable in the nature of if the incentives or benefit to dealers, customers who have achieved any particular targets. Then, if the benefits is provided partly in cash or kinds and is not sufficient to meet the TDS, then the TDS is required to be deducted by the benefit provider on. If the recipient will discuss liability, then deductor has to rely on the declarations which has been given. The proof has to be given to the deductor, and this transaction has to be reported, which we already discussed earlier. Then about perquisite in respect of business or profession. reimbursement of as a pure agents will not be considered if all the conditions as a pure agents as per the GST Valuations Act is being satisfied. Now what this says that if there is a contractual agreement, neither intends to hold nor holds to any title to the goods or services or both. Goods are not hold or held for any own interest, and this is only actual amount incurred for the to procure the additional goods or services, and certain additional conditions also are required to be satisfied. The supplier should be a pure agent of the recipients and pays to the third party on authorization. He should have the authorization. There should be separate indications such payments in the invoice, that is, this payment is made as a for a pure agent and supplies for the procured for any procurement which is there for his own account and for the pure agency. There has to be bifurcation in the invoice. Then only it will be treated as a pure agent services. Then, in case of one-time settlement of loan, there is circular number 18 of 2022, dated 13th September. If one-time settlement of loan is there, then it is not to be treated as perquisites. Public financial institutions, scheduled bank, cooperative banks, state financial banks, etc., deposit taking, such type of this, it is not to be treated as taxable. Yeah, please.
It's a definition of benefit. The definition they have defined, it's a benefits and policy definition of the benefit. And any list is given that these are covered, which are not.
See, you can refer to our institute's guidance note, which has come for 194R. Our institute guidance note is there. In that very everything detail it is given, and even in our 44 AB guidance note, which is there for tax audit, in that everything that's been given, what is to be covered as a perquisite, what is not covered as a perquisite. You can refer it to that. Everything is there in that. Then coming to, yeah, please.
So regarding the reimbursement of operator, is not available. And they are not in the nature of the town. So can you please elaborate, explain how?
See, basically, if it is supported by actual document and actual expenses, then it will not be treated as a perquisite. It has to be supported. Suppose if suppose if you have spent 100 rupees and you are charging 110 rupees, then it won't be treated as this out of, then it is treated as income. So it has to be supported as actual. Now suppose as a clearing and forwarding agent, it is there. Yes, you are paying a custom duty or such as, suppose as a chartered accountant, I am billing it to my client for suppose I have paid a fees for them. So suppose I'm doing some secretarial services and I paid a MCA fees on behalf of them, and I have paid 500 rupees as an MCA fees, and I'm charging MCA fees as 500 rupees only. Then it is a out of pocket expenses. It is not actual. This is no. It is not a this. So that is similar way. If I'm charging 510 rupees and I'm not giving a supporting evidence, then it won't be treated as a pure agent services.
So that is the liability lies on the.
Yes, yes, definitely. Yes.
What if the is called a debit note and not an invoice?
Fine, debit note, you can save it as give it as a debit note, but not a problem. Yes, yes. I 194R will not be applicable on that. If you charge 510 rupees, then 500 it will be applicable.
Your agent himself will be not getting paid to be better. Your agent.
No.
Pay charges.
No. So your pure agent charges, there how it will come? It won't come. It is not a perquisite, no?
No. Your agent is incurring expenses at port. So when he's paying it to the vendor, okay,
Where it is a benefit.
No, he's paying it to the vendor against the invoice. There is no name.
See, it is not a benefit, no? Where it is a benefit.
Under other sections like.
It is not a benefit. See, it is where it is a benefit.
So when expenses incurred through pure agent, nobody paid deduction, right?
See, basically, it is not a benefit. Where it is a benefit. 194T about TDS on payment to partners of a partnership firm. That is newly introduced section, most debatable section, most challenging section. I think why this section has been introduced. Was it required or not? Inserted by Finance Act 2024, applicable from 1st April 2025, financial year 2025-26. TDS on payment of to partners. Threshold limit 0. 10% on payment made to the partners of the firm. Single payment or aggregate payment that is more than 25,000 in 20,000 in a financial year. Now what is covers? That is TDS to be deducted earlier of credit or payment to the accounts in the books of the partner or books of the firms. Even if you credit or payment which is normal as per the payment which is there. Actual payment to the partner. Now which payments are covered? That is salary, remuneration, commission, bonus, interest on any account, either it is a loan account or capital account. So it covers at least for financial year 24-25 is not there. So that is a relief for you as of now. So it will be applicable next year. Some practical issues are there, smaller firms. Unlike section 194A, there is no relaxation based on turnover or gross receipts. So small firms applicable to everybody. Turnover limit is not there. That is 1 crore turnover limit is not there. Even app firms to whom tax audit is not applicable, it will be covered. Increased compliance burden, additional deduction is required, payment to filing of returns, TDS will be there. Penal action against the firms for delay in non-compliances. TDS people will be, TDS department will be after you if you don't deduct the TDS. Unnecessary burden on them also, because they are not going to get any revenue out of this. Unnecessary burden on them, or there's a basis burden on chartered accountants also. Capital blocking. Now a firm who is earning 5 lakhs rupees. A simple small example, which we have sent a representation to the CBDT right now for in TDS when it is shifting to TDS CPC 3, TDS CPC. A firm who is earning 5 lakhs rupees, there are 3 partners who are going to get 1,65,000 rupees remuneration. Simple. What will be their taxable income? What revenue there means you are going to deduct TDS rupees, TDS 10% on them. They are not going to pay any tax out of it. They have to deduct TDS. They are not allowed to get a lower rate certificate or nil certificate. You deduct TDS 10%. They have to apply for the refund. They have to get the refund. What is the use of this section? Nobody is that way. God saves. Interest and late fees imposed on additional financial burden of the fund. So if you don't pay the TDS, interest and penalty to be given. Liquidity of partners. Now 1,65,000 small firms are there. Withdrawal by the partners to be excluded. Now what has to be done in this case? The partners can pay the partner by way of a monthly or quarterly withdrawal as suitable and a delay of this. So you can do it every month. You can pay as a withdrawal rather than a remuneration or. So in that case, TDS can be saved. The year end you can give it as a TDS or remuneration. So this provision of higher TDS for certain issues are there for higher TDS rates for ITR non-filers. That is suppose in case the PAN is not operative, then TDS will be on a higher rate. No paying partner cannot obtain 197 certificate. There is no 15G, 15H applicable. Adjustment of excess deficiency and TDS deduction, subsequent deduction in the same financial year is not applicable. Section 40 AIA applicability. Now, suppose you are not deducted TDS, then that amount 40 AIA disallowance will be there. Coming to the last topic, I think my time is also running. You have to complete it. People are there. So 206, 1G and 1H. Again, people are traveling out of India after COVID. Flights are full, rates are full because Bombay to Delhi. Last 2 days back, there was a big huge and cry in government because airports are like bus stops now. Flights are not available. 20,000 rupees ticket. Bangkok, Bombay to Mauritius tickets are much cheaper than Bombay to Delhi. And there is no revenue, these tax collections are lesser. So it says that white circular number 10 of 2003, there are certain changes that is on 30th Jan 2023. TCS to be collected, there is up to 7 lakhs authorized dealers, aggregate remittance of rupees 7 lakhs in a financial year for overseas loan, financial by the financial institutions specified 80 financial year 2021 onwards, it was 5.5% for education for medical treatment. From 1st July 23, it is 5%. For others, LRS from financial year 2021 onwards, it is 5%. But from 1st October 2023, it has become 20%. So that is the change. But overseas tour programs till 7 lakhs, it is 5%. Greater than 7 lakhs, it is 20% from 1st October 2023. Now it says that threshold applicability for due rates to difference, that is threshold limit is applicable for full year will do not renew after 1st October 2023. It will cover remittance by remitter to all the authorized dealers. So you have to combine with all the authorized dealer and you have to give the declarations. So when if those who are doing the audit of the authorized dealers, you have to see that you obtain the declarations from all the authorized dealer, and while auditing, you see that all the authorized dealers have obtained these declarations and verified. If this limit exists, this exceeds, then and this deduction is not done properly, then appropriate actions may be taken against the remitter for the false information. Threshold limit of 7 lakhs to apply independently in the aggregate. For overseas tour program package, independent threshold limit is there. For LRS, combined threshold limit is there. Now, it says that purchase of international travel ticket or hotel or accommodation on standalone basis won't come in that, but not covered and sold. So if it is splitted, then it won't apply because tours and travel, it says that package as per circular number 10 of 2023, it says that if international travel or hotel or accommodation is taken on a standalone basis, then it is not covered as this tour program. Overseas tour program has been clarified that international travel ticket, hotel or accommodation with or without food, boarding, lodging, any other expenditure in relation to it is taken as a combined. Should it include at least 2?
I'm going for a wildlife photography group abroad, right? And there are the people who are organizing the tour for us. And if I have to remit amount to them, because they are conducting the tour abroad, nothing to do with India, and I have to remit in foreign currency to those people who are really invoiced. They say after accommodation, diet, fees, food, everything. And what is the situation there? Yes, even one would be assigned.
7 lakhs rupees is there?
No, but in the 5% limit, 7 lakhs is not there. So if it is less than 7 lakhs, then also nice and easy thing on it.
Yeah, it is there. This slide will help you. This quotas.
So up to 7 lakhs, if I am limiting for hotel accommodation and to light fees, no TCS.
This slide will be helpful to you. So now what the people are doing to save this TCS? Book one from this, book one from this, book one from this. So TCS on sale of goods, that is TCS to be collected by seller, now 2061H, based on receipt of the sale consideration exceeding rupees 50 lakhs in any previous year, 0.1%. from the PAN of the buyer, it is operative, otherwise it is 1%. Not applicable if the buyer is TDS is on 194Q. So simultaneously, both these sections won't apply. Income tax provision says that TDS, any one provision will apply. So that has to be taken in mind. Okay. Exceptions if the buyer is a central or state government, then TDS, this provision won't apply. Exports of goods outside India, section 2061 or 1F or 1C is to be excluded. Then this is the example that is in any one previous year, that is 2021. If the sale is 70, this tax will be collected. This is the for example, I have given it to you. That is practical example. You can just refer to that. Then coming to the last 2-3 slides are there. That is turnover limit for the seller is including of GST. There is no clarification by the CBDT. That is circle number says 76 of 50 or 2000 GST issued by the sales can be relied on. Then receipt of consideration by the buyer. There says that inclusive of GST as per the guidelines. Adjustment of sales return or discount of indirect taxes. That is no adjustment is required since the TCS is applicable on receipts which are already adjusted. Inter-branch goods transfer is not to be considered as sale of goods. Export of goods is outside the India is not applicable, and even this sold if the goods are sold to SEZs or EOU, this export oriented units, it is applicable. Sale of electricity, renewable energy saving certificates and energy saving certificates, they are also not applicable if traded to power exchanges registered in accordance with the CRC. Then about certain practical issues are there. Suppose if delayed payment interest is there. So if delayed payment interest is there, 206C will be applicable. TDS has to be deducted. TCS has to be deducted. Listed shares. If the listed shares are sold through stock exchanges, then TCS won't apply. But if it's sold to off-market transactions, then TCS would apply. The general mistakes are being made that off-market transactions are there. These are TDS, TCS is not being deducted. See that TCS now, what has happened after these companies are being listed, off-market transactions are generally being done. So TCS has to be deducted in that cases. Slum sales, transfer of business and not goods and will not attract TCS. Then sale of motor vehicles, if covered under section 206 1F, then TCS will not be applicable. But if the value is more than 10 lakhs, 206 IF will not apply and IH will be applicable. Then overlapping provisions that we already discussed it. Then if fuel is supplied to non-resident airlines, then not applicable. What happens if TCS, TDS and TCS is not deducted? We have department people here, they will say what is to be done if TDS and TCS is not complied with. But there are only 11 sections. This will help you. Demand is there, interest you have to pay, 271C, 271A, failure to deliver this TDS, failure to file the returns, failure to this. Over and above, we have penalty, prosecutions, etc., etc. But see that government money is there. You cannot use the government money. Plus, overall, when you have deducted TDS, it is not your money. First and the foremost thing you are using, you cannot use it is not your money. You have deducted somebody's money and it has to go to them. That thing you have to remember. That cannot be used for your business. That money you have deducted because 100 rupees you are supposed to pay to somebody, you have paid 98 rupees or 90 rupees. 10 rupees is the government's money, you have to pay it to the government. That is your duty. You have to remit it to the government and you have to pay because TDS principle is works on that because that instead of paying it to that person, you have to that 10 rupees you have to report it to the government. So you have to comply with the provisions and you have to comply with the provisions of the act. Should not come within that. Yeah, please tell me.
So for all practical purposes, like 206C1H needs to be read with 194Q. Now, in the starting of the financial year, if we are going with the concept that the customer is giving us a declaration that he will be deducting the TDS. and we are not charging him TCS for that purpose. But at the end of the financial year, we come to know that he is a complete non-compliant customer, or he is a partial non-compliant customer. He has deducted on some of the invoices, but not on all of the invoices. So first, my first query is whether we are required to collect the TCS on the remaining of the invoice. Like partial non-compliance also counts that, like out of 100, he has contact on 60 and 40, we need to comply for TCS. Secondly, there is no time limit for TDS return filing. Okay, so, TDS return filing, like he can revise the TDS return of the earlier financial year also. So after, like if we have taken a call that he is a non-compliant customer and we charge him TCS and he revises the earlier year financial year, return, then are we going to give him the credit again? Like what is the time limit for that?
See, first of all, if he has not deducted TDS on some of the invoices, you have to just tell him that you have not deducted TDS, you please deduct the TDS and deposit the same. That is the first duty, because what is happens by mistake or so some other reason he might have it might have skipped. It is better that he deposit the TDS and you get the credit for them. That is the right method. That is the right approach, because today suppose if he has not deducted the TDS during the course of the audit, he might deduct the TDS and he might deposit it. So it is not the right way that you deduct the TCS on the balance invoice. That is the correct approach. And suppose he doesn't deposit it, or doesn't, then TCS is required to be deducted by you. But it is better that you, then you, if he is not deducting it, you after approaching you by approach or your approach, and he is not deducting, then you are required to deduct TCS. You take a proper call after informing. Yeah, please.
Case of TCS and sale of car, an individual who is not a businessman, he has, selling a car which is, the value is more than 10 lakhs. So this TCS provision can applicable.
Yes, definitely.
Even for individual.
Yes, definitely is applicable to everybody.
15 time, everything is.
Yeah. Yes, definitely, yes.
For one of case also.
Yes.
So in case of,
Can I complete? The last slide is remaining, please. Let me complete, then we'll take a question. Yeah, okay, continue, chalo. We'll finish the lesson.
in one of the case, the client has purchased machinery. The seller of the machinery has collected TCS. We came to know the TDS was required to be deducted under 194. Now what we should do? He is operating already deducted, collected TCS for non deducted TDS. We are saying it is our primary responsibility to deduct under 194. Yours is the secondary.
Once you have deducted,
He has first collected, deposited. That was we came to know, we had to deduct TDS on that.
so first he has collected.
He has collected. Now he's saying I have already collected. Now we are asking for a TDS. If we are deducting TDS, you reimburse us. He says I have already deducted, collected.
So once he has done it, anyone has complied with this, done, fine.
So anyone may, or it is the other.
One person is complied with, it's fine. No, this is how the law has been complied. See, basically, one thing is this purpose of TDS and TCS, the government wants to ensure that the transaction has been recorded and it has come on the record. So once this transaction has come on the record, either it be 206C or either it be 194Q, whatever the provisions has been complied with, it's compliant. It's the transaction has been compliant. So that is the rule. Once the rule has been compliant, it's compliant. Fine.
So what I did, my prime responsibility is.
Your responsibility was there, but since you are not compliant, the other person has complied with, it's fine. The law is complied with, fine.
Clarification provided by the department. Provided by the department, stating that it is the primary responsibility of 184Q. However, in case if the seller is already collected, then the purchaser is not required to deliver the TDS under 184Q.
And after deducting, after payment, you are also required to see that TDS certificate is being issued. So thing is that after filing the returns, TDS certificates are also not being generated, not being issued. So this is the most forgotten thing. people file the return, they don't verify it, and the demands are being generated on the system. You don't even take care that what is the status of the return which has been filed. So see that, ensure that these returns what have been uploaded on the return date has been corrected, and more than people are having more than one time. Ensure that this 10, so now that this will be corrected because now PAN 2.0 is coming. CPC website is new website is been developed. Your old 10 automatically will get cancelled under the new scheme. But that is thing. But at least you see that these things are being surrendered. You are not the 10s are not which are not being operative. Please get it surrendered. Please surrender it. So at least number of 10s gets inoperative. And apart from this penalties, late fees, etc., you have this disallowance under section 40 AIA. And second things, see, mostly I have tried my level best to see that everything is covered, but all critical issues can be resolved. There are solutions to it. So once the solutions, you have to be at peace, and be at peace, at least be at peace so that everything can be resolved. So you can change it. You can't, don't make the life tedious. But see that you are this happy with the TDS sections and TDS provisions, and let us see what TDS CPC 3 TDS 3 brings it. Thank you very much, and I have tried my level best to bring it to the best extent possible to make it more and more simpler. Thank you. Yeah, now tell me, I can take more questions. Yeah, how much time I have? I think 5 minutes. 15, 20 minutes. Okay. Hmm. What you can do is you can, once your purpose is over, you can just approach to the assessing officer. You can surrender the TAN number. Procedure, you can obtain this original TAN certificate.
Please seated, the break is not yet started, please.
You can, what you can do is the original TAN certificate, you can approach the jurisdictional officer where your TAN number lies. It, you can write an application, make an application. See, first of all, there should not be any demand which is outstanding on your TAN. The TAN, and you can submit it with a letter to the TAN officer, the jurisdictional officer, with a letter, and so submit it to them. They will cancel your TAN number.
About the sell of unlisted company shares. An individual is buying a company which is covered under the 2061. So he is he required to deduct because shares are considered as goods?
Yeah, definitely.
So it is.
Yes.
But that you didn't mention in your.
I told it is 0.1%.
But it was in listed shares.
Listed shares, if it is sold through stock exchange. Off market is there. Go ahead to sell.
In case of interest on rate reduction and rate benefit, 1%, for every month, 1.5% for every month. Is that month, a calendar month or 30-day period? Because I read those things.
Calendar month. This is from the month in which you have deducted. No? See, it has to be, suppose you have deducted on 30th of March. 30th of March. So it will start from 30th of March till the period you paid. So March will be calculated, April, and till the month you paid. March will be calculated, April, May, you pay it on that date. From March will also be concluded.
That's what happens in practice, but I think I read one judgment or something which said that since it is not defined anywhere, you have to take it as 30 days. Nobody's practicing that. Okay. So for delay of 32 days, 3 months interest will be charged.
Yes. What is law? So if you pay on 7th, there will be no interest. After paying on 7th, you will have to pay 2 months interest.
I delay by one day and I pay interest for 2 months.
That is what the law says.
Can make the presentation.
Hello. 50 lakes limit is applicable for 194 Q and 2060 one is both, no?
Yes, yes.
So the problem arises when the declaration is given, the 184 Q starts deducting only after 50 lakhs invoice is over. But when all receipts comes and 50 lakhs limit is crossed, so in between what to do? 194.
See, generally what happens, you might be knowing your customers, if your supply till that now you don't deduct that. See, generally what happens if your party is regular
Yeah,
and you might be knowing that your dealings are regular.
yeah.
Yeah, and your supplies will be your dealings with that customer is going to be regular, then
Yeah.
you can start deducting it at that time only. And suppose because based on your past experiences, if
But generally, they don't do that way.
they don't
In that
do,
case, TCS is applicable in between receipts.
so you can do it after once it crosses that limit.
Yeah.
Yes, yes, definitely. See, it depends.
Gets covered up first, and then the invoice limit is still not covered. So in between, TCS is applicable.
So that you have to take the proper call working on it. So you have to just analyze it.
So after working on it.
Yes, yes.
Yeah. Okay, thank you.
94 Q applicable for the gold coins to be, paid to customers or to the computers which is purchased for.
Everything,
Yeah.
everything is the turnover.
So there was a question for 194 for purposes you would need a guidance for this term, right?
Please stand up. I cannot. Yeah, tell me.
So for physics, you told me that there is a guidance note. Where can I find it? Because
You can our institute's guidance note for 44 AB is there, recently issued implementation guide for tax audit. In that full detail, first 7 to 8 pages are given for that only. All along with the examples it is given, which is covered, which is not covered, everything is there.
It's that. So if we, in my question, like if after the end of the financial year, we come to know that we were supposed to charge the TCS for the customer because he has not complied with the TDS rules. And what about the rate of TCS? Like it will be specified person, we need to check it for that financial year or current status.
That financial year. You'll be able to deduct it for that financial year, no? So for that financial year, it will be applicable.
So we need to maintain the like specified person status of.
Yes, yes. Every year when you start your accounts, you have to verify which are the specified, this specified person, which are the this PAN which are valid. Every year you have to do this exercise. Government means this is your full year's exercise. You have to do it every year.
So again, going back to that partial compliance customer. So suppose the customer does not comply with the remaining of the invoices. So are we supposed to connect the TCS for the balance invoices?
See, if he is not complying, then you have to do it, no? It's either way. Either you comply it, either you comply it, either he complies it. Anyone has to comply with.
So, but that needs to be checked on invoice level.
Yes, definitely.
There are cases where NRIs are giving properties on rent. The problem, what happens is that when they make an agreement, they don't mention these are a resident area.
What is the responsibility of the tenant? Like, when he says I'm resident, he doesn't, how does he get a proof from the income or may not be a resident or non-resident? Just to avoid one. This sort of methodology adopted by the government.
Now we will come to know whether Aadhaar is linked or not. That is done now. So Aadhaar is not linked now, so automatically your tax will be at the higher rate. Now Aadhaar is not linked. Now see, you on the fine, then
The person.
take it, you have to take the declaration, there's no other option. That's it. Now you cannot do it, say.
That NRI also making other plan, right? So when you making an agreement of legal license.
In agreement, if he has written a residential, in agreement, if he has written resident, you cannot do anything. You can't do anything. You can't do anything.
Sir, there is a government plan, you have released to the government plan. Now that amount will be that.
But except the thing is that you can ask for a residential proof or passport or anything for that. Fine, that's nothing, then you cannot do anything. Fine, there's no, you can't do anything. If it's given, if the agreement, if it is written, fine, it's finished.
Yeah, so we have been to the government line and it is including of GST. We deduct the TDS including GST. Okay, because you can't argue with the government line. We deduct the TDS and when we file the return, the department has verified that it is not revenue is not the TDS deducted. So what they have done is, they have considered the turnover and on that basis they have given the TDS credit. Portfolio. So what is to be done? I said they have rejected that amount in the return.
See, basically, when you are filing the returns, in that there is a column, income tax sales, in that below duties and taxes collected.
Yes.
Profit and loss, there is a column for duties and taxes collected. Have you reported in duties and taxes collected there?
Yes.
So you can mention it over there.
So, see, first they have given the notice that your turnover is not as per the 26 years. The turnover is not achieved. So we have replied to them. This is what has happened because the client has deducted more TDS. Still, they have done the assessment and they have rejected the proposal.
Even to go for appeal according to me.
I think today's session is for TDS. This is not for income, but then also I'll reply to you. You can write a mail. You can write a mail to this income tax department's email ID is there, itr.processing@incometax.gov.in with a detailed instruction. They will process your return accordingly. itr.processing@incometax.gov.in with the details. They will process your return correctly. With your detailed explanation, just send a proper and short, don't write full essay, just with a detailed explanation with this proper reconciliation. I told that you write a explanation in this email ID with this, and so they will process it correctly. itr.processing@incometax.gov.in.
Sir, this 206 AB check for specified workers is available only for one financial year. As an auditor, if you want a historical check or as you want.
You have to send in the every assessment, there should be a part of your audit program for each year. And at the beginning that this has to be obtained and saved for each financial year. This is the first part of your audit program.
Historical check you can do it, but at the time when you verify, they are the financial year. We have an option to select the financial year for which you want to do the historical check. So historical check option is available.
In that drop down, I think only 1 year is available.
No, 2 years, not years, sorry.
Yeah.
Deduction TDS under 194 few of them deducting on gross supplies and few of them are deducting on the net supplies. So what is the right way, sir?
See, it has to be on the net of GST.
So if they are deducting on the gross, then what is
You have to instruct them that you have to deduct net of GST. You have to send them the circular.
Sir, can you tell us the considerations for 195? Section 195.
So definition for construction consideration is there because is already definition is available on the.
No, I mean, the items to be considered, if TRC, form 10F, etc. So what process should be followed by issuing the form to conceive?
In general, you should collect the.
Yeah.
TRC, you have to select the TRC, then no permanent establishment certificate. These are the two basic documents which are required to be. 10F is already there. In 10F, the requirement list is already given. That basically two documents. documents are there.
See, yeah, but for 195, it is better to always select TRC. Tenant should be submitted on income tax portal. Acknowledgement of tenant is required. Many a time we have seen that a paper tenant is submitted, but you should ask the client to submit a paper, acknowledgement of tenant submitted on income tax portal and no fee certificate. That he doesn't have any permanent establishment, and in some case that he is not resident for more than 183 days, a declaration form. So this 3 to 4 document is required.
I think we'll save the rest of the queries for the department officials to answer. We can review Avinesh sir. Sir, with your permission. So I would like to ask permission for the board sir to give a formal vote of thanks.
Thank you for the opportunity. Friends, all of you will agree, we could not have found better speaker than Avinesh ji to appraise on our requester. He has in detail covered major amendments and appraised and answered the majority queries given by the members. I also welcome officials from the department, particularly led by Sujata madam, and we look forward for a very enlightening session ahead. With that, I request all of you to give a very loud applause for them. Thank you. We'll break for 10-15 minutes and reassemble for the next session. Thank you.